The biggest misconceptions are that it's illegal, overly risky, and extremely complicated. And if you can believe it, that hasn't changed in 25 years. In reality, it's self-directed retirement accounts are well established, completely legal.
So, really excited to introduce CamaPlan, who we worked with in the past, but I want to introduce Carl. Up front is a Cornell University graduate, third generation real estate developer. Began his career in the 1970s, so he's been at this quite a bit. He was employed as a rocket scientist at Kennedy Space Center. I remember going there as a kid. I can't believe that he was employed there at one point. And he's presently one of the founders and principals of Cama Self-Directed IRA. CamaPlan's a national company headquartered in Pennsylvania. And they have implemented plans and managed millions of dollars in real estate transactions, commercial, residential, property notes, mortgages, spoken to many groups, real estate investors, CPAs, financial advisors, mortgage professionals. He's got a pretty unique background of education, experience, and knowledge relating to business, finance, overall management make him a key element in the success of his clients and controlling their financial future, which is why a lot of us are here too, right? And we have, of course, Matt Moore, does business development, and so I've been told Matt is the man who makes it happen. So really glad to have you guys on. Welcome.
Thank you very much.
Appreciate
right.
it.
Absolutely. Yeah, because we've worked with you guys quite a bit in the past, and it's really cool to have you guys on the show now. And so I wanted you guys to describe CamaPlan's role in the self-directed IRA industry and how you support investment sponsors.
Sure, that's a great question. Cama is a self-directed retirement account administrator. We've been in business since 2003. We help sponsors and clients, we call them asset providers also, so you'll hear me use that today, use their IRAs and 401ks, educational savings accounts and health savings accounts, which some people forget about, but I did want to make that clear today. And they use those accounts to invest in alternative assets, such as real estate, private lending, private placements, and precious metals. We don't recommend any investments or sponsors. We do not provide investment advice. Our role is to process and administer the investments so they are properly owned by the retirement account. We do the IRS reporting. We allow the clients to benefit from the tax advantages of those accounts that they use. That often means investors keep more of their returns, which gives them more capital to reinvest with sponsors over time.
Gotcha. And you're seeing more retirement funds used as, especially like the baby boomers age, right? And so what trends are you guys seeing in how sponsors are using that retirement capital to grow their businesses?
We've got a couple billion now, but I do have to say that the stock market and its record returns over the past couple years, people have moved some of their money out of alternative investments into the stock market. And some people are now moving it back, thinking that they've got a higher chance of the market going down than they do of it continuing to grow. So you're pretty accurate there. Most successful sponsors typically create an investment offerings for different types of investors, right? For example, they may offer a debt fund that provides regular income distributions quarterly alongside an equity opportunity geared toward long-term growth investors. So you need something for each type of investors that are out there. 40-year-old isn't going to be able to touch his money. 70-year-old pretty much has to start taking RMDs unless they're in Roths. So what a lot of people don't know is many successful sponsors or capital raisers raise 50 to 60% of their capital from tax advantage retirement accounts, particularly sponsors that are not heavily reliant on family office capital. Retirement capital, etc., can create a more stable investor base and help sponsors attract capital more consistently instead of constantly chasing it. Most of our clients stay with the asset provider or sponsor that continues to do reliable returns and communication. Hopefully that makes sense.
That makes sense. Matt, I don't know if you have anything to add from
I would
Carl's
just
put out
just
there.
summarize that. You go back to your question about how are sponsors using IRA funds to really scale up their business. If they can have investors writing bigger checks and deepening their relationships with the sponsors, that's the whole goal. And so, qualified money or money from qualified funds tends to be stickier money. What do I mean by that? If someone's going to go through the process of opening up a self-directed IRA and doing a rollover or doing a transfer, they tend to want to earmark that money to be with alternative investments, but specifically with that sponsor who they've done a deal with and they've underwritten. And so as they do that and they become more comfortable with that sponsor, they're going to want to leave that money with that sponsor. So the qualified funds allow sponsors to just get greater capital deployment from fewer investors.
Right. And for sponsors who are, I would say, newer, but I've even seen this with some more experienced sponsors, what do you think the biggest misconceptions are that investors have about using IRAs to invest in alternative assets? Because even those who know what they are, some of them still aren't super clear on how to use them correctly.
The biggest misconceptions are that it's illegal, overly risky, and extremely complicated. And if you can
Hmm.
believe it, that hasn't changed in 25 years. Even with all the articles and the books and information out there about these, that's still the biggest misconception. Sometimes investors are also confused with the concepts like UBIT and UDFI. And most of the time, if they have to pay that, they're making a lot of money. In
Hmm.
reality, self-directed retirement accounts are well established, completely legal, and when structured properly, most of the confusion comes from a lack of education and unfamiliarity with the process, which we help the clients get over. Our website and our expert staff is available to answer questions from not only investors, sponsors, but also their CPA, accountants, financial planners.
Logan, just it's just the very fact, the biggest misconception is that you can do it. Can you do this at all in the first place? And it's
Hmm.
not like it's the non-accredited investors who are not aware of this. It's everyone. It can be a teacher or a plumber, or it can be someone who's working at a VC firm. These people, a lot of people just aren't aware that self-directed IRAs are an option, and they're not aware of the flexibility that they offer. And so, in numbers, there's what, Carl, almost $40 trillion in qualified funds.
Exactly. So they're unlocking those qualified funds. That's a big place to, a big number to chase in today's world.
But less than 5% of it is in self-directed IRAs. So people don't know that they can do it. They may or may not have been told by their advisor at one of the big institutions that they
Hmm.
shouldn't do it. So letting people know that the tax code allows for this and that it's something that you can do and the process is pretty straightforward is I think the biggest sort of your educational hurdle to get over in the first
Yeah,
place.
that kind of leads into my next question because obviously we're capital raisers, right? That's what Tim's bread and butter is. And a lot of what we do is teaching people and educating people on how to attract investors. What are some mistakes you see? Because IRA investors are becoming more of a popular avatar for people as you guys, in part, educate people on how, why they should use them. So, what are some common mistakes sponsors make when they're trying to attract these IRA investors?
I think the biggest one is not leveraging experts like CamaPlan to help educate those investors and simplify the process. Uh, Sponsors either provide little education or unintentionally overcomplicate things because they don't fully understand self-directed accounts themselves. So if you leverage CamaPlan, and by the way, it doesn't cost you anything, but we're glad to talk to your clients. If we talk to them and then they invest, you're going to have more and more clients that do it, and we're going to end up with more and more clients. So it's a win for everybody.
Yeah,
Right.
I used to raise capital myself for a debt fund, and for me, it was time to talk to investors about self-directed IRAs, and I had enough. We were selling these fractional participations in individual fix and flip loans. So the investment structure was unique to unfamiliar to a lot of our investors. So I had to dedicate a lot of my bandwidth just explaining that, or we had a fund, how fund worked. I didn't necessarily have time or wasn't front of mind for me to be talking about self-directed IRAs with my investors. And I think that the same thing, if you're doing a syndication, some people have never heard of a syndication before. So if you're going to layer on a self-directed IRA on top of it, it can seem overwhelming. And so, yes, there's this huge capital opportunity with all this money that are in IRAs, but it can seem like it's too complicated for the capital raiser to try to explain. So to Carl's point, you don't have to be the expert. You just have to have the courage to bring it up and share it as a strategy with your investors. And then once they want to know more, then you can utilize us to help take the conversation to the next level.
Yeah, a mistake, Logan, is to demonstrate that the real financial advantages of using these accounts, right? Investors need to clearly see how using an IRA or 401k can help them keep 25 to 50% more of their profits over time. Like to say, structure trumps strategy. Think about making an investment to risk, letting it sit for 3 or 4 or 5 years, and then getting the money. You get 40% less than the guy using the IRA after taxes for the same effort. So that clearly needs to be done. And again, Matt and I will help you that out.
Right. And to Matt's point, that was going to be my next point. If I'm a syndicator, right, and I'm trying to raise money and inform I have to educate them on what a syndication means or what a fund means and a 506B, like they have these questions. The IRA is not at the top of my mind because I already have, and I'm trying to close my deal and I'm trying to get inspections done. So leveraging someone like you guys sounds like a much easier idea to me.
Yes. If a guy says, hey, I don't have any capital that I can deploy right now. If you have an IRA or 401k, you want to diversify. It's a good segue to that.
Absolutely. And because you guys have a different perspective on talking to investors than a sponsor does, from that perspective, what do you think helps a sponsor establish credibility with investors early on?
Communication is critical. I think that's with anybody. I think having webinars, podcasts, Q&A sessions, definitely not going dark on people, conference calls, maybe a newsletter, updates, those things help build trust, right? Invite them to the office, let them see the books, things like that. Overall, sponsors should underpromise and overdeliver, always remain accessible. I think having a strong professional team, including attorneys, CPA, administrators, and advisor, also adds significant credibility because of the people that you surround yourself with.
Matt, do you have anything to add?
Well, I was just thinking about a sponsor who we work with, and this guy knows a lot about self-direction, like written a book about self-direction, as a matter of fact. So any IRA question that he gets from his investors, he can answer. I mean, 95% of questions he can answer, but he doesn't. He brings myself into the call or someone from CamaPlan's team because he appreciates the role that we play as a neutral third party to answer that questions to make the client or his investor feel more comfortable information from someone else as opposed to him just saying it. So I think able to, if we're talking about just in terms of having the IRA conversation, I think there's a lot of value in knowing how IRAs work yourself as the capital raiser, but also understanding that we can play a role in being a neutral third party to share information in a completely neutral way because we can't sell investments.
Right. And obviously it's mostly education, right? Yep. Whether we're talking funds, syndications, taxes, retirement accounts. So what do you think the most effective ways for sponsors to educate investors about self-directed IRAs without overwhelming the investor or overwhelming themselves and telling bad information?
The best approach, I think, is to keep things simple. I go on the KISS principle, keep it simple, stupid. It's one step at a time. Should build partnerships or experts like CamaPlan to help guide the investors through the process, because you shouldn't be focusing on the investment. Let us handle the office processing. Often recommend that investors first open their account and fund their account so they're in a position to invest. And we're one of the only administrators, custodians that don't charge an annual fee until someone's done an investment. So we want them to get their account open, get their money ready so that they don't miss an opportunity, and then focus on the due diligence for the investment itself. So some of the most successful sponsors, and that said, sit in on calls with our mutual clients or investors, even open up self-directed accounts themselves so they fully understand the investor experience and what they're going through. And that also helps us streamline the process for the specific investment.
And you were talking about like the most effective ways to communicate. We do a lot of webinars like that. I will go and present to a sponsor's their leads about how to use self-directed IRAs, or if it's a CPA's network, we'll help email campaigns where we can provide some copy, self-directed IRAs that they can use, and those are effective. But the most effective thing is very, very simple. It's proactively bringing it up when you have conversations with your investors, and it can just be as simple as, like Carl said, if someone's saying, you don't have the cash, oh, do you have an IRA? Or asking, how do you plan to fund your investment? Or do you plan to use qualified funds or non-qualified funds to fund your investment? And that could lead very naturally to, I didn't know you could do that. And then now you're off to the races in terms of having a conversation about an IRA investment.
And a lot of sponsors put a link to Matt's Calendly right on their website saying, did you know you can use your IRA to invest in this investment? For more information, schedule a call with Matt.
I do that a lot with IRA tax advantage deals. You'll tell an investor something, and I love that you said that, Matt. People just say, oh, I didn't know you could do that. I didn't know that was a thing. Sometimes that's all it takes. You're just bringing it up. But obviously, we're talking about benefits of IRAs and how to educate your investors. But let's say I want to attract more retirement capital. Like, what do you think is a good educational or marketing strategy to attract those kinds of investors?
I think the simplest strategy, often the most effective, by starting with existing investors who already like the product, like the investment, who are not using tax advantage accounts, and then just show them the benefits. Now you have more money and no extra and no more investors, right, that you have to talk to, right? But to me, that's one of the first things, and it's one of the easiest things to do. And the other thing about that is it shows that the concept works with your investment. And we can also do webinars and make it available to some of our investors who aren't currently deploying their capital. Sponsors should consistently remind investors that IRAs and 401ks are available funding sources. Already talked about, especially when the investors say their cash is already deployed. I think that demonstrating side-by-side examples of investing with and without tax advantage accounts can be very powerful. Slide. It's also important to make available to answer questions from investors and their team, the attorneys, CPAs, and financial advisors. It makes them feel comfortable, confident when using retirement accounts for alternative investments. And we're used to that all the time. We help their CPAs understand it.
Gotcha. So starting at home, where, hey, I already have this group of investors that might like and trust me. Let me just see if they have retirement capital available before I try to rewrite my marketing strategy to attract investors and that's my goal, is to attract retirement capital, right?
Yeah.
There's some out there already in my list.
And what's good about that, starting kind of that targeted list of investors who've gone through a full cycle with you, for example, is they know you know them and they know your product. So you're not having to to explain what a syndication is, right? And like we talked about
Mhm.
before. So now you're ready to have, and presumably you have some rapport with them. So now that you're able to focus solely on the self-directed IRA part of the conversation, which obviously seeks out new capital opportunity with that investor, but it also begins to hone your skills as the capital raiser to speak more confidently about self-directed IRAs to begin with. So I think it works on two levels. And then, as you said, once you fine tune it with that group, then you can expand it out to and scale it with all of your leads that are coming in.
And let's say I am a sponsor, I'm someone who has a healthy list of retirement capital and self-directed accounts in my database. Are there certain characteristics of deals that make that seem more appealing to self-directed IRA investors? Is there certain characteristics or trends they look at that they prefer over others?
Same fundamentals that appeal to any investor apply here, right? Trustworthiness, transparency, reasonable risk, fair returns, and simple investment structures. What most investors want to look at, right? An example, it probably takes, I don't know, somewhere from 3 months to a year for an investor to get to know you and have confidence in you, et cetera, right? And that's more important for us. It's not that important because the client's going to put their money with us, and then we're going to turn around and send it out to you or the sponsor. So the money's going to be sitting with us for a day or two, and then their IRA is going to be holding a piece of paper that says they have ownership in a debt fund, a feeder fund, or an equity position. So really the things that are every investor looks for. I think also sponsors who provide educational resources about self-direction tend to stand out and create greater investor confidence because they have a wider role of potential investors.
Got it. So yeah, it sounds like just like what any investor would look for. The IRA, they also look for the same thing. They have like a primary motivation that drives investors to use self-directed IRAs for alternative investments. Like, what their primary motivation? You've touched on a couple of them. I just wanted
Yeah.
to go a little deeper there.
No, that's great. The primary motivation we see is tax advantages and the better returns and the more money they get to keep. Then, of course, there's diversification and real diversification. We all know the dot-com days and the COVID days where everything went down at the same time. Alternatives gives you a little more diversification, makes your portfolio a little bit more control over the investments and decisions. And again, I think the potential for stronger returns is the key for that. Investors also like the ability to deploy retirement capital when discretionary cash may be limited. We see that a lot. Most people, counting family offices, have about 7 times more money in tax advantage accounts than they do in their discretionary accounts.
And to that point, so liquidity challenges and related to that can play a big factor in why someone might want to use IRA funds versus using cash on hand. So if you have a multifamily syndication that has a 5 to 7 year lockup, and you're saying to this investor, you want them to put in 100 grand, they might not be so comfortable with that because they have college to pay for, or they have a wedding to pay for. But if they're 50 years old, they can't touch their money that's in an IRA without penalty anyway. So using IRA funds allows them to participate in the deal, but it doesn't hurt their walking around money, so to speak. And so the timing of the investment might align better with IRA funds than it does with their cash.
Right. And that makes total sense, especially when you consider over the last few years in regards to multifamily, where things have been with liquidity and cash. The economy right now, gas is like a gallon in some places. So some people might say, hey, even if I have the 50 grand to invest in this fund, I might prefer to use this IRA that I can't touch anyway I'd rather do that than hurt my rainy day fund, right? That I have cash or liquid. Um, do you see them, the IRA investors right now, multifamily? I think you are on one side of the fence or the other regarding multifamily at least. Do you see them gravitating towards specific asset types right now, or are they remaining pretty diversified across alternatives?
Just like everything in life, there's cycles. I do have to say that precious metals have been the most active in the last year of any of the classes since we've opened the company a couple of decades ago. Multifamily real estate struggled over the past couple of years, but it seems to be start improving because I think a lot of the projects people got overextended with the higher interest rates are actually getting a haircut and people are coming in and buying them at discounts. I do think that's happening. Land development on the other side is attracting a significant interest, and private lending continues to be the longtime favorite among self-directed investors. If that
Matt, do you
helps.
see them?
And this is kind of nationwide, looking over our
Yeah.
books for the past year.
Yeah, I think
Do you see?
state's a very asset class for our clients and for self-directed IRA users in general because it's very understandable. And real estate can mean a lot of different things. It can mean owning investment properties, investing in funds or syndications, or it can mean lending. And so, because are so many ways to participate in real estate, I think we've seen a lot of people sort of just pivoting what exactly they're doing, um, still staying within real estate. And so I think there's some lending opportunities that have become very, very attractive people who wanted to offer second or mezz products or invest in second or mezz products on projects that needed it. So um, to Carl's point, precious metals has been on fire for the past 36 months.
Did not know precious metals was such an interesting investment opportunity until the last year or so. So I've seen some hilarious posting and people buying into it, and apparently it's all the craze right now. So
It is an interesting asset class, and there are
yeah,
interesting investors who invest in the asset class.
yeah, great way to put it. I think that
We're
describes it
not,
pretty
we're not even,
accurately.
and we're not even touching on crypto.
Yeah, man. Yeah, sure that over the last few years, you guys have seen a lot of your investors want to dip their toes into things that you didn't think they would be in, like, right? Especially for the age group of like being interested in crypto seems like a foreign concept to me. Like, I'm 30, but I know plenty of people at that age who actively own Bitcoin and all kinds of crypto. So I'm sure you guys have your hands full with that as well.
Yeah, it was self-direction at the end of the day. People will, we don't advise one way or the other, so people will
Yeah.
do what they do.
Absolutely. And from CamaPlan's perspective, you talked about a couple of them. Because you guys are a neutral third party, I think you have a different view on relationships with investors. So, what are the best practices? You guys work with a lot of sponsors. What are the best practices you see sponsors use to build long-term relationships with investors? Right? I ask this question of sponsors we have on, and they'll say, "Oh, well, I'll do handwritten letters, or I'll send a bottle of wine, or birthday cards." Do you guys see anything like that that you think works the best?
I think it's important to give value. I think it's important to give that value for free. We do a lot of education, build trust with our clients. We don't send a bottle of wine. We do a newsletter, answer questions. We have consistent communication over time. Uh, Best sponsors, I've already said it once, under promise and over deliver, maintaining open communication with the investors. They also recognize that different investors have different needs. Some investors prefer debt funds, as Matt talked about earlier, that want payments routinely, and others will prefer equity investments focused on the long-term growth. So I think it's good to something for everybody. You're talking to someone. Don't let half the population go away, right? I mean, real estate, as an example, everybody uses it. Men, women, pray, teach, etc. selling men's or women's clothes, you shut off half of the population pretty much. I think it's good to have different alternatives. And I know Percy has done that in the past and has helped out different investors with different products.
No, I was just going to say, I think, wine and personal gifts, like place for them. I used to work in the philanthropic fundraising world, so I know full well how that
Mhm.
goes. Um, but I think at the end of the day, investors want good returns and they want you to protect their money. And if things go haywire, then the next best currency is communication and a commitment to getting their money back. We actually just had Eddie Austin on our CamaPlan webinar, so I'll give him a quick shout out. And he told a story about how he was away from his family for 6 months because he had to go and basically save a project. So that is not good that it happened, but what an incredible experience, and it had a happy ending, but what an incredible he was able to build with his sponsors from his investors from that opportunity. So I think being able to be exceedingly communicative so paramount, and when things get bad, you have to lean into the bad, and you have to lead into solutions and have a lot of communication. And the sponsors that we see who are successful don't have their clients calling or have their investors calling CamaPlan saying, "Do you know what's going on?" They know what's going on. CamaPlan's not a part of it. It's when we hear investors saying, "Do you guys heard from them? Do you know what's going on?" We know that there's some radio silence that's happening that's not good.
Right. Yeah. I always say, because I ask this kind of question to most of our guests, I think everyone would rather invest in a deal with a sponsor where the deal is good. Deal on paper, everything looks good, but the communication is A plus versus, I have a question, I can get them on the phone and ask it. Many hours of the night, right? We all have those investors. I can answer and ask a question and get it answered versus the deal that is just a slam dunk on paper. It looks fantastic, out of this world returns, but I can't get them on the phone. I don't know what's happening. I don't know what's going on. I think most people would rather have the former than the latter because if you are treated like a person, you feel a lot safer with your investment versus I'm making money, but I can't get this guy on the phone. I don't know what's happening. So I have to call Matt with CamaPlan, right? I have to call Matt and say, hey, Matt, do you know what's happening with my deal? Because I have no idea, right? Which I
Yep.
think is super important.
To that point, and this is definitely a plug to our customer service, we understand that we are a service provider in the investment business. There's already anxiety attached to the risk associated with the investments, some level of
Mhm.
anxiety. We don't want to add to that anxiety because of people having to not knowing what's going on with the rollover, or they're trying to take a distribution or something like that. So knowing that associated these investments, this product that we provide, we make sure that we're available by phone, by email, that you can reach a real person and get the answers that you need, at least to your self-directed IRA. We don't want to be add any additional friction to this experience.
Yeah. Eddie in the comments, it's a great line. Bad news does not age well, just deliver it. I love that. Very succinct and well said. Bad news does not age well. Don't just deliver it with a countermeasure and what steps you're taking to fix it. Perfectly said, Eddie. Fantastic. I think that that's a mindset and a philosophy that every operator, sponsor, owner should all live by. So, um, well said, Eddie. Fantastic. I'm curious, what kind of operational challenges do sponsors encounter when working with retirement accounts, and how can they maybe avoid them?
I don't think many sponsors fully understand the process, the administrator's role, right? The documentation flow, the tax reporting, annual valuation. Waiting too long to bring in an experienced administrator like CamaPlan. The best approach is to do a step-by-step dry run, open an account, fund it, and process a sample investment so the sponsor understands exactly what the investor experience looks like. We understand it, our back offices understand it. Coordination between the sponsor and the administrator is essential for creating a smooth process for investors. And I think doing that eliminates a lot of the operational challenges on both sides.
Yeah, no, just I'm not trying to be a brown noser to Eddie, but we did to the with him, so I know firsthand kind of his process. But I'm also using him because he's raising money. So this isn't just CamaPlan saying this. This is actually heard from a sponsor, and that upfront work of reaching out to the administrator that you're working with, your IRA administrator, IRA custodian that you're working with ahead of time to understand what the process is and have your investment paperwork file with them is hugely important so that once the account is and the funds are ready to be deployed, there's no fire drill to try to get the money over to the sponsor. And so what we do at CamaPlan is we do a first account call. It's kind of exactly what it sounds like. It's the sponsor, our operations team, usually myself, going over step by step how everything's going to look. We don't do it for every investment. It's just the first account, but it's so the sponsor understands what the process is going to be, and they will have firsthand knowledge of what the timing to be one, but also when the investor inevitably calls them, because that's what will happen and wants to know what's going on. The sponsor knows. The sponsor isn't like, oh, I don't know. You don't want to create any kind of lack of confidence. So want to make sure the sponsor is involved because it only helps the relationship with the investor and with your relationship with us and makes sure that everyone is on the same page.
Very well said. And go along with that, is there any best practice? It sounds like like as Carl said, is a fantastic idea, right? So you know everything works. Is there any kind of best practices sponsors should follow to make it easier for the investor?
It's like anything, keep the process simple and straightforward. Like said before, walk the investors through it one step at a time. Sponsors, good if they experience the process themselves and open up an account and go through it. I think that's the best, as Matt said. And have knowledgeable experts available to answer questions for the mutual clients, and they're to help them do that. I think it goes back to the communication. If they can reach the people and you don't go dark, everybody feels better.
Right. Yeah. And do you guys see from your perspective, investor behavior has changed, in the current market compared to previous years, whether it's since COVID, like how have you guys seen investor behavior change over the last few years?
Well, the first thing that jumps out to us way off is investors are using AI tools, and online due diligence groups are popping up more than ever before. We're all seeing more creative deal structures, not just the old waterfalls and placements, and greater emphasis on reducing risk with operators. At the same time, online are definitely up for alternative investments and have become more common. And also have the scams, so you got to be careful about that. So they're doing more diligence before committing these. And I think it's easier and easier with the AI tools out there to do that.
Have you seen any trends with behavior?
Definitely the of dude groups, meetups, whatever you want. I'd say those have really exploded past 12 months, and I think part of that is because these groups are AI to fuel due diligence. But we are not investment advisors, and we encourage everyone to do their own due diligence. And that means do your own due diligence. Don't solely rely on AI. Do it yourself. Read all the 70 or 105 pages of the PPM or whatever it is to make sure there's alignment to your understanding of the investment. But I think, and on a positive spin, I think the opportunity to collaborate with others to understand deals and then eventually, hopefully, maybe negotiate better return metrics for yourself and the other investors you're possibly participating in with is a great opportunity that's becoming more abundant.
And check out the principal backgrounds, easy, simple one.
Yeah, I'm glad you said that about AI, Matt, because I love AI. I use it every day. But can go too far with AI. AI is not it is not artificial intelligence. It is referencing things that it finds online. When it comes to something like due diligence, you can, if you just trust it at face value, you can be in some hot water if you're just blindly trusting an AI tool to underwrite something for you, for example. Your due diligence, use tools to speed it up and make it more accessible for every investor out there, but also with how far you go. Because it can do work for you that you did not intend it to do. And then you get into a deal, you get into a project, and you realize, oh no, I didn't do my due diligence like I should have. So I love that answer. Very good answer there. And with market uncertainty, kind of, I think 26 is looking better this time than it did this time last year or the year before. Have you guys seen certain trends during market uncertainty compared to a few years ago, like people, the IRA investors being more on the sideline or anything like that?
No, I think this thing holds true for any investors. They behave during certain markets. They usually gravitate towards asset classes that they already understand, trust, and feel they can control. Investors often have become more conservative and focus on proven strategies and operators with strong track records. They like the history so that they can sleep at night.
Right.
Carl, let me ask you a question, and I don't tell me if you agree with this. Do you think someone who's using a self-directed IRA, they might be predisposed to have maybe a more sophisticated investment withal, and so they might be better at pivoting strategies during different times, during different cycles, or not really?
Well, I think a lot of them are accredited investors. The other side of it is they're savvy enough to understand self-directed IRAs. I mean, look at Peter Thiel and Sam Walton and big guys out there that have these accounts. They have the value of it, and it's just another tool that they use. So I do think they're more than the investors. But again, most self-directed people do their homework. A lot of people spend time on their summer vacation, planning their summer vacation, than they do their financial. So from that aspect, I think you're with your thought process there, Matt.
That's a good question. Matt should be running the interview. What are we doing here? Really good question, Matt. Is there certain tools, systems, processes that tend to make sponsors more successful in your eyes when working with retirement accounts?
Sponsors most successful when they have clear systems, repeatable investment processes, strong communication, right, and find next steps give them a tangible next step. If it's repeatable, if it's the same investment, you change the name and the address and the terms, it's great, right? Offering multiple investment options for different investor profiles also helps. Investors value consistency, repeatable returns, and risk management.
Yeah, I'm basic in this answer because I just go back to what I said before. I think it just comes down to whatever system you need to have in place to talk about it, to bring it up. And I don't think it's for a lack of desire that that capital raisers don't bring it up. I just think there's a lot of other priorities that take the place of proactively discussing self-directed IRAs. But I think if you're following a script, if it can have a place in that script, if they're running ads, cut out a segment of them and work with us to make those portion of those ads focused on self-directed IRAs. I think it just taking the initiative to actually start talking about IRA money. It's not going to be a fit for everybody, or they're not going to want to do it, or not everyone's going to necessarily have maybe the account that they can access, but some people are going to they're going to want to learn more, and that's what will take the conversation to the next level. But you got to start the conversation at some point.
Yeah, you should lead with it, right? Because when I look at my investments, I want to keep my tax advantaged accounts working, the higher priority than my discretionary cash, because my returns are so much better with them. So I think you should actually lead with that. And if you educate people and they don't take advantage of it, that's great. I've never had anybody say, I wish you hadn't educated me on that. I usually get a thank you. It's just not the right time. So I personally lead with keeping my tax advantaged accounts, hate lazy money in tax advantaged accounts.
I think the system or process is just taking Matt's Calendly and putting it on my website. From what it sounds like, I'll just handle it. I'll just let you handle it.
If you want to do it, here it is, and he knows your investments, so all the time.
Absolutely. And you guys have given a lot already, but if you could give maybe like a new sponsor one piece of advice about raising money from retirement accounts specifically, what would it be?
I'll go first. So
okay.
I to the summit last
in the fall.
Yep. And so I got to talk to some of these newer, and it was very valuable to me because I got to see firsthand kind of all new information that they were juggling, and it's a lot. And so no one, certainly CamaPlan, is not expecting that sponsors become IRA experts. So the most piece of advice is to leverage your custodian, leverage your administrator, leverage CamaPlan. Bring into the conversation and help us lead these conversations about IRAs with your investors, so we can show them how it's done. You can turn that stone over if it doesn't work, but at least you tried and you learn how the process gets done. But I would say lean on CamaPlan to help you unlock this capital.
Yeah, 36 trillion help you do that. Very well, Matt. I think that's the case. And again, I would lead with it. And I'd say, by the way, if you use this in your managed account, you make 43% more profit in the year than if you do it in your discretionary funds and you're in a 30% tax bracket, as an example. And most of the people you're talking to are in a 37% tax bracket.
Very good advice. Just leverage we say this all the time when we're talking about raising capital, just leverage someone who knows more than you do. You'll usually be in a pretty good spot. So I like that answer. And obviously a lot of the people watching here live and people who will watch this afterwards are aspiring to raise a lot of money. I think no one here is like, hey, I'm going to raise $1 million, then I'm done. We always want to keep growing. So for someone who aspires to raise a lot of capital, what approach do you think is the most important?
I think we've touched on it. Consistency, trust, and communication are really important. This business is about building long-term relationships, not chasing quick wins. Get to know your investors, understand their goals, focus on creating lasting relationships. Wealth is over time through trust and consistency. So, that's where you have to be looking for it. This isn't the get rich quick. This is a relationship over the long term. And we do that at CamaPlan. That's how we like it. Flash in the pan, chasing shiny objects. It's not our way of thinking.
Yeah, I think good stewardship of others' money is the way to go. So just treat everyone's money like it's your own mother's and operate in that mindset.
Yeah, that's an easy one. That's an easy one. Act like it's your mother's money. We don't want to disappoint mom, do we? So
I'd rather lose my own money than my mom's money.
Yeah. So. Oh, yeah. I'll agree with that. So I think the mom's money is better than your own because I spend on things I don't need all the time. So fantastic. You guys have been used a lot of valuable information. I'm sure you've educated a few people here on the call live on why they should use administrators of benefits, how they can they make more money, which means it's a win-win-win. The listeners engage or learn more about CamaPlan and how they can work with you guys.
Like you said in the beginning, Logan, that makes it happen. So check in Matt, get on his Calendly, and he'll help you do whatever needs done. Matt, do you have a slide you can put up with your name and number? If you can't, he's got it in the chat. But also, I'm hoping Tim or Logan will also get a link on there so that they can, Matt, you can get them a link to put on their website so that they can contact you directly. That would be great. And again, you're not going to be in Dallas this weekend, right, Matt?
Correct. We had a dance recital.
Okay.
My daughter. So sorry, I have to skip that one.
No, I'm glad it was for your daughter and not yourself. But down there, and if you have any questions, see myself, and I believe Joe Fulvio also works with Matt, will be there. So we'll answer any questions in Dallas at the time. And there's Matt's slide up there where you can do it, or that QR code will probably get you on his calendar.
Correct.
Yeah, and I put info in the chat as well. So if anyone wants to reach out, they are fantastic at what they do. So I really appreciate having you guys on. It was you gave me quite a few things too, because I'm not as knowledgeable as Tim when it comes to the IRAs. So I learned a little bit too.
Yeah, and remember, not just IRAs, but 401ks, educational savings, accepts, simples, health savings accounts, etc. All can be used, and they can be partnering with each other as well. We've got a lot of strategies because we've been doing this for decades, and we learn from our clients and their profession.
Fantastic. You guys have been fantastic, amazing guests. Look, sorry we won't be able to see you this weekend, Matt, but we'll hold you to come to the next Capital Summit in the fall.